Gold is on a collision course with $2,000 an ounce and potentially much more. Is it headed there in a straight line, or are there potentially pullbacks and moves in the market that we can take advantage of as traders? Let's zoom in and take a look. In our last analysis video on gold, we showed you that we were potentially finishing a one wave of an impulse that would carry us on to these higher highs we're talking about after a standard wave 2 retracement. Alternatively, we showed you the scenario with a light retracement and a retest for a buying opportunity. Well, price shrugged off those divergences and broke out to newer highs, creating that buying opportunity, and we were sure to keep the members up to date. Fast forward to today, and we've just hit that initial price target for that long entry. If you're enjoying the content, go ahead and hit that like button and be sure to subscribe so you get the content in a timely manner, because as you know, in trading, every second counts. Price off the November lows has been quite vertical, with very shallow retracements and very few overlaps until the recent consolidation that we broke out of and set us up for the long trade opportunity. However, price at this degree is not revealing what we would consider a probable count that we can see at this point. That would typically mean that we are either in the midst of a corrective move, or this is an unresolved, very bullish move. And since we have our context of the larger degree perspective that I showed you earlier, we would expect that this is potentially just the start of a big bull run. However, we can't discount the fact of the potential corrective move that might be finishing up right at a golden corner pocket of the larger move that it's retracing out here. So let's just be careful. While we do believe that we have a big bull run ahead of us, we do have this larger wave that we could possibly be correcting. Once we break through the golden corner pocket in this area of confluence, it really does cement the big bull run to come. In the meantime, what we need to be on the lookout for is that when the market does retrace, and all markets do retrace, that we have a close, watchful eye of the price action and what type of pattern it's shaping up as. Does it shape up as a potential zigzag playing out that we want to see to add to a long position to take this ride up to 2,000 plus? Or does it play out more like an impulse where we would want to potentially maybe offload some bags? On the lower degree, let's keep an eye on these measured moves as they're playing out quite well in the market and continue to trade them until they start to fail. We're also going to want to keep an eye on the lower degree, lower time frame Elliott wave patterns that can keep us into those short-term gains. But we're always going to be looking for that larger external retracement and look to see that it plays out like a nice corrective move so that we can add to our longer-term position. Of course, we know that all that glitters is gold, but if silver's more your thing, be sure to check out this video by Hove on silver price analysis from last week. And if you're into these measured moves, be sure to check out the training resources on transformtrading.io.